Dividends, dividends, dividends. We received a good amount of dividends during April 2020. Just a 289% increase in dividends year over year from last April. While that might sound great, remember increases in small numbers result in big percent changes. What's going on, everyone? I have a live day of trading here, and we're going to cover a stock that I'm going to be buying today. I'm going to be buying about $600 worth of equity into it. And then I'm also going to go over every single dividend that I received in the month of April 2020. So dividend growth investing, it is a very fun journey, but it's not always going to be a path that leads you straight into riches right away. Here on our journey, we will start to hit some bumps and we're going to be meandering, but that's all part of the fun, is getting out of bed every day with that level of unpredictability, uncertain of what tomorrow will bring, and trying to capitalize on opportunities, just trying to reach that financial freedom. Just like Ryan Giffen did when he answered our last trivia question, right? Which is, what is Elon Musk's new son's name? And I'm not even going to attempt to pronounce it. I'll just say that that's the name that you give your kid when you have way too much money. It's not like he's ever going to need to be filling out a job application. He also has another son named Nevada, just like the state, which I think is pretty interesting in itself. And nobody seems to have gotten the Drake song reference in my last video. It was the #1 song here in America very recently, so the first one to answer that one correct will get 2 points now. So here are the updated standings as I get closer to doing that gift card giveaway. Also, I reached 29,000 in the portfolio for the first time on May the 18th. So here you can see all the dates that I kept hitting new milestones at. The more money that comes in, the more dividends, the more compounding, the more of that really just starts to work for you, and you start to reach these milestones even quicker, just putting in the money consistently week after week, and I've seen pretty good results here so far. And I document the whole journey for you guys here with weekly update videos, so don't forget to subscribe to the channel and hit that like button. All right, let's start to get into the stocks here. So I'd actually bought Honeywell a few weeks ago. I totally forgot to put it on the last video where I went over my portfolio. I just left it all the way at the bottom of my last video with all the other super small positions that I have that I don't even bother going over. I actually didn't even notice that I had forgotten to bring it up until Kevin from Adventures in Us actually brought it to my attention. So some of you guys are starting to know my portfolio even better than I do, which is pretty crazy. So I have 5 shares of them. I've been buying in for the last couple of weeks here. Small return. It was actually down in the 120s. And just recently here on the May 13th, it was down to 122. So that would have been probably a better buying opportunity, but you can never actually time the market. So I'm pretty happy with my position. We'll slowly be adding more and more shares of Honeywell as we go on here. And if you don't know what Honeywell does, check out my video on it. I go into way more detail on the different types of products it puts out. It has a history of paying dividends and increasing dividends, so be sure to check that out here. I already have one pending here that won't be paid until June the 5th. 5 shares, 90 cents a share for a total of $4.50. So just wanted to go over that quickly since I forgot to do that last time. So the stock that I'll be buying today is one that is another Warren Buffett owned stock, and Warren Buffett actually has a pretty large position in this stock, and that would be Bank of America here, trading almost 1% lower today, so I'll get a small little discount. And Bank of America, basically Warren Buffett, he grew a good portion of his wealth with 2 main industries. The main being insurance, and then the second one was these big banks. His companies currently own a modest $22 billion of Bank of America, or recently just 11% of all shares outstanding. So banks are obviously hurting right now with all the things associated with the C-19 and low interest rates. And there's also fear that people and businesses, they might default on loans since many businesses can't even operate right now. So it's hard to make money when you can't even open your doors. And Bank of America has lost about 35% of its share price since February here. As you can see, it was at $34.72, and then it just completely dropped here. So it's still down pretty considerably here in the last 3 months, down 34%. And unlike many other stocks who seem to have risen every time more and more unemployment numbers come in, Bank of America, it doesn't seem to have made that recovery nearly as well, which leads me to think that there's some attractive valuations here. In their first quarter earnings report, they announced that they had growth in both deposits and loan balances. And a good portion of those deposits, they don't actually need to be paying any interest on for the consumer. And then the ones that they do have to pay interest to, Bank of America actually has some of the lowest interest rates among the big banks at just 47 basis points. So that's actually good for Bank of America, but it's kind of bad for the consumer. And the bulk of their loans are for residential mortgages, so you would hope that people prioritize housing when determining which bills that they can pay for. As we can see here, Bank of America business segments, they just continue to rise year over year in growth, whether that's in consumer loans, commercial loans, consumer banking, etc. You get the gist there. And I was just listening to Bank of America's first quarter earnings call, and they boosted their loan loss reserve by $3.6 billion. So they're already taking some precautionary steps here in case the economy gets even worse than it is already. And even after doing all this, they still made $4 billion in after-tax earnings. That's pretty crazy. This is all while Bank of America is trying their best to help out those in the community. In terms of business, of course. Giving out loans to help grocery stores and healthcare companies, those companies need the liquidity now to meet demands for their services. Bank of America was planning a big share buyback program this year, but luckily they didn't pull a Boeing, and they have announced that they're suspending those plans indefinitely. But still, as of now, they're still planning on paying a dividend, which is good news for us investors. And a lot of people in the community would argue that dividends are a human right. I also want to point out that Bank of America, they seem to be a model of excellence in terms of what an employer is supposed to do. They've been allowing certain employees to work from home. They've been having protective barriers at all of its branch locations. And they're also working with employees on increased child care support. While many other companies are unfortunately laying off people left and right, Bank of America has actually hired over 2,000 employees since March to meet increasing staffing needs. Now, to me, a company wouldn't do this unless they were able to afford it. So that's kind of good news that I see that Bank of America is actually hiring more people, because they know there's going to be negative publicity if they just hired people and then fired them the very next month. Also, they announced that there would be no layoffs in 2020, which is pretty incredible. Let's see if they can actually hold on to their word there. Bank of America also provides a starting $20 minimum wage and is actually bringing on an additional 3,000 students this summer for summer jobs and internships, which is pretty crazy because this is a commitment they could have taken back and nobody would have blamed them with the way that everything's been going on. And I personally, when I was in college, I actually had an internship rescinded with just a few weeks before the summer started. And I remember I was just so devastated. And luckily, I was able to scramble and find something really quick. But I think this speaks volumes to Bank of America and that they actually somewhat care about taking care of their employees. It almost makes you forget that they are in one of the most shadiest business models that are almost borderline illegal. But in all seriousness, yeah, I do see some short-term trouble for Bank of America with people deferring their repayments and Bank of America having to waive a lot of fees since we are in a crisis, and nothing in this world is free. Everything comes at a cost, and they are going to be seeing some big hits to their credit card segment as people are not spending as much, being indoors and whatnot, and they're not being able to travel or just leisurely spend like they normally would. And again, basically every company is going to be infected in some way or another. And I'm sure these are all going to be short-term issues here. The C-19, even though it's been impacting our lives every day here, it's not going to last forever. And I'm more than happy to just keep getting paid dividends. Bank of America currently trades at around a 3.14% dividend yield, which is considerably higher than the crappy interest rate that you would get if you put your money into a savings account with them. And it's also higher than it's historically been yielding too, which makes me also think that I'm getting a good value here for Bank of America. And I know some of you might be wondering, well, why did Warren Buffett recently sell some of his bank stocks, does that mean he doesn't like them, like he doesn't like airline stocks anymore? Well, no, this isn't exactly that scenario. Unfortunately, I just can't get into Warren Buffett's juicy old brain to tell you the exact reason, but it's important to note that he only sold about 2.2 million shares of Bank of America, and basically that was just enough to get him under 10% of ownership of the company. If Berkshire owned more than 10% in a public bank, it would be classified as a bank holding company, and therefore they would be having to go under more intense scrutiny of following regulations set forth by the Federal Reserve. So as long as he keeps his shares under 10%, he's not a controlling party of a major public bank, and he doesn't have to follow any extra regulations. Also, as I previously mentioned, Bank of America has been doing crazy amounts of stock buybacks during the last few years, meaning Buffett's ownership percentage in the company could go up without him theoretically buying any more shares. So for all those reasons, I'm going to be buying a couple shares of Bank of America today. Currently own 9 shares, down a little bit on this position, 25%. But let's try to get that average cost down. So it's at 30.41 right now. And let's buy 20. Let's try to make this a limit order. And right now, Bank of America, according to Google, is trading at $22.65. So let's put that in here. And then we'll do it for today. And then I'm going to be buying 25 shares for a little under $600. So I'll review it and then I'll swipe up to submit. So now it's pending and there it is. It's completed. Now I own now I own 34 shares and the average cost went all the way down to $24. So that's the real power of dollar cost averaging there. I got it down considerably there. That's why I like buying in little increments over time and just buying the market at its dips and valleys and peaks and all that jazz. So I've also been looking at doing some covered calls just to practice some new strategies here. And it seems like a really low risk, low reward kind of strategy. So I'm kind of new to this, but if you guys have any recommendations that are stocks that you think are good picks for doing this type of strategy, let me know in the comments. I've been looking at a few here, such as JP Morgan, Bank of America, Coca-Cola, Pfizer. These would all be, I think decent picks. So to be able to do a covered call, you need to own at least 100 shares of that stock. So it does require a little bit of capital, and I probably wouldn't do anything over $100 in share price right now, just because if I did that, then that would be making up like a substantial amount of my portfolio, and I don't want to be having it do that. So I think Bank of America is a good pick. That's part of the reason why I bought 25 shares today. It's really trying to find a blue chip stock. It should have around a decent dividend yield, around 3%, and it should have a low volatility. Okay, now let's get into the part of the video on why you actually clicked on this video, and that's to go over all the dividends that I received in the month of April. So this first one here, SPHD, this is really a March dividend. It just happens to have an April date on it, but that was for 94 cents. SPHD is an ETF, that claims to be low volatility. I don't know about that, but let's just keep going here. So we got Pepsi. This kind of went down a little bit on share price recently. So they paid 95 cents a share and I owned 5 shares. So $4.78. If it continues to go down, Pepsi share price, I will definitely be adding into it. Also, if you guys didn't notice, it seems like Robinhood had some sort of little design change. Now it looks like this green. It kind of looks like somebody spilled Mountain Dew all over it, which is a Pepsi product. Okay, then we have Union Pacific here. At the time, I only owned 3 shares of the stock, and I got $2.91 from them. I now own about 5 shares, so will be a bigger dividend payment next time. Coca-Cola, this is one I definitely have added more to, so now I own 9 shares, so that one's going to be a lot bigger next time. FedEx, only own 1 share, 65 cents. Iron Mountain, another stock that I only own 1 share of at 62 cents a share. And then we have Medical Properties Trust. And this one I added a lot of shares to recently. So now I own 46 of them, and they pay out 27 cents a share. So next dividend payment will actually be in the double digits, which is always pretty exciting when looking back and seeing, just how much you've grown in dividends with a particular company. Then we have Chubb. I believe they actually just announced that they had a small dividend increase, which is always nice. Chubb, an international company, 75 cents a share. Insurance, like we previously mentioned, Warren Buffett loves the insurance companies. Store paying out 35 cents a share for its dividend. Let's hope that Store is able to continue collecting rent from its tenants. And I own a couple more shares of Store right now. Obviously, they are in jeopardy of cutting their dividend, as is not Reality Income, but Realty Income. Now I've actually owned, I think, closer to 7 shares of them, and I also now do the dividend reinvestment program for a couple stocks, and is one of them. So every month that Realty Income pays a dividend, since it is the monthly dividend paying company, I will be basically having Realty Income continue to buy itself, and the amount of dividends every month is going to increase, which is always exciting. Then we got Medtronic. They also recently announced a dividend increase, and at the time I owned 5 shares and I got 54 cents. I'm going to be buying more of them, hopefully here soon, if they continue to remain under $100. And then looks like this is one of the last dividends of the month here. We got JP Morgan at $7.20. A lot of its rival in Bank of America, but both JP Morgan Chase and Bank of America, I think, are phenomenal stocks. I wouldn't mind holding these for the long run. And I'm just going to continue to increase my cash position in owning more equity of these two great companies. For the time being, both Chase and Bank of America are paying dividends, and it seemed like on both of their conference calls that they are confident that the dividend will continue to last. So let's keep that up, and next time I will get more than just $7.20 since I bought more shares. And then we have the real SPHD dividend for the month of April, and that is $15, 15 cents, and I own 6 shares for a total of 94 cents. So that's going to be it for the April dividends. In the whole month, I made a whole $32.66. And that's compared to just $8.39 that I made in April of 2019. And that represents a 289% growth. And obviously that's not sustainable, but as you guys saw, I'm going to be increasing the number of shares that I own in these companies, and I hopefully expect these companies to also increase their dividends over the years. So come July, I know I already basically can bank it in that I'm going to be getting more dividends than I received this month of April. And $32.66, that might not sound like a lot, and that's not really a lot of money, but that's still money that I didn't have to go out and work for. That's money that really worked for me. And to be honest, I probably could have made more money just going into the bathroom at work throughout the week. But I'm just glad that I'm finally seeing results, and I'm really excited for the future. And this tranche here, this January, April, July, October tranche, that's not nearly as big as my other tranches that happen in the March, June, September, December. Those are my big dividend months. These other 2 months of the quarter, it's not nearly as big, and I didn't plan it to be that way. It just happens that most of the companies that I own, they just happen to pay dividends in those months. I'm sure a lot of us are in a similar boat. So if you guys like this content, guys, be sure to hit that like button. It really helps me out a lot, and be sure to subscribe to the channel. I'm constantly posting updates on the portfolio, constantly going over what stocks I like, and I really appreciate the support, guys.